Are you in the market to refinance your current home mortgage? If so, great. I mean, rates are crazy low, so you should be. But before you do so, make sure you check out this video. I'll provide a couple good reasons and tips on when you should refinance, when it makes sense to you, and when it doesn't. Okay, so let's jump right into it. If you're thinking about refinancing, there's a couple times where it makes sense, right? So let's presume that you bought the house a few years ago and you have some equity in the house where you can roll in the closing costs. So let's assume you have a higher rate and now you're thinking about, hey, should I refinance and does it make sense? What kind of situation would I have to be in where it would benefit me, where it would make sense to refinance? The first reason and the first situation would be to get a lower interest rate, right? So that's what we're all looking for. And the rule of thumb is that you want to get at least 1% lower interest rate. So if you can lower your rate, your interest rate 1% in what you currently have, assuming same term. So let's say if you're on a conventional 30 years and you want to refinance, do a rate and term refinance on a 30-year. If you can lower your rate 1%, it makes sense to refinance, assuming you'll stay in the house for another 5-7 years, okay? That would be reason number one. Reason number two is maybe you purchased your home. Maybe you had a little bit lower credit scores and you use an FHA loan, which is a great product, nothing wrong with that. But you have that PMI that's going to be there for the life of the loan, right? So another reason would be to refinance and refinance to a conventional loan, get a lower rate, and also get yourself into a situation where the loan that you have, the PMI would be there temporarily, right? So if you can refinance from an FHA to a conventional, that would allow you, at least at some point in the near future, for your PMI to drop off once you have 20% equity. If you stay with the FHA, the PMI is there for the life of the loan. If you switch to a conventional, you should be able to get a much lower rate. And two, the PMI would drop off once you hit 20% equity. So there's a benefit over there. Whenever you're looking at refinancing, it has to make sense, it has to be a benefit. So sometimes you might be in a better position, you're making more money, and you might be able to go from a 30-year to a 15-year too. That saves you substantial money long term. And if you love the house that you're living in, that's something worth looking into as well. Another reason and time that you can look at refinancing your current loan is maybe do a cash out. Maybe you want to lower your payments, you have equity in the house, and what you can do is you can refinance. Maybe the rate won't be as good as on a regular rate and term refinance, but if you do a cash out, you are able to roll in maybe some of your high payments, right? Let's say you have a car that has a high note on it, you know, $500-700 on your car, you might be able to roll that in, do a cash out, and basically get that paid off, right? So if you're looking at a monthly cash flow for your household, it would make sense if you can roll in any of your credit cards that have a high interest rate or your car payment, just to help you with your monthly cash flow going forward. So on a cash out, basically you roll that into the loan, then it's called a cash out here in Texas. And when you close, you basically don't have to pay that, right? And I know that a lot of people will say, hey, Peter, maybe, you know, I'm gonna take a 5-year note and add it to a 30-year mortgage. Agree, but take a look at it this way. You're probably not going to stay in the house for 30 years, right? I mean, we don't know many people that actually live in the same house and stay there and keep the same loan type that they originally purchased the house with. Okay, so if you're gonna move in 5-7 years, still makes sense to refinance, do the cash out, and have a little bit of cash flow. You can always, you know, pay extra. You can always, the savings that you have, what if you took that money and instead of just paying it for the car, in the next 5 years, take that extra money that you're saving and make principal reductions? What if you did that? I mean, that would help you substantially build up equity in the house. That would help you save a lot of money, tens of thousands of dollars long term, where keep the same payment, but take that extra money, do a principal reduction. Make sure you don't just throw money at when your payment is due. You would have to take that money and do a principal reduction. If you do that for 5 years, I mean, that's gonna add equity. And when you sell the house, you're gonna have so much equity in the house, it definitely makes sense to do that. So in these cases, you know, if you're getting 0.5% or 1/4% lower, it doesn't make sense to refinance. If you're thinking about moving in the next 2 years, 3 years, it doesn't make sense to refinance. So I hope you find this information helpful and just watching out for you guys. That's all. So thank you again for visiting. Make sure you hit the subscribe button and the notification button. This way, when I release a new video, and you'll be getting weekly videos with great content, you don't miss it. Okay. Again, hit the subscribe and the notification. Thank you so much for visiting. Enjoy, and I'll see you in the next video. Thank you.